Can one indicator really make that big of a difference? Really change your trading journey? And these are the kind of results you can actually get from it. Watch the full video to see the full breakdown on this extremely simple strategy that can change your trading journey forever. So the indicator we are talking about today is the 50 EMA. So the 50 EMA is the average of the last 50 candles. And this helps you identify the trend in the last 50 candles, which is very good for people who are starting off and are beginners, because it gives you a visual representation of what the trend is at the moment. This indicator will show you that you don't really need to complicate your trading strategy at all, or even have a complicating strategy period to make money. All you need is consistency and follow simple rules every single day. You don't need a 90% win rate strategy. All you need is something consistent that every time you win, you make more than you lose. As long as you can do that with a 50% win rate strategy, you can make a lot of money. So let's go over the actual strategy. As you can see here, all I have is a 50 EMA. And if we were to zoom out, you can kind of see how the EMA tells you the direction of the market. And once it goes under the EMA, you can see it's a short. If it's above, it's a long. You can kind of see the purpose of this just when you zoom out. We're using the 5-minute on micro NASDAQ because I trade futures and I tend to like the lower time frames, but this works on any single time frame. So as you can see, just visually pulling back, because a lot of traders tend to focus too close into the market. You do need to pull back to see what the market is doing in the bigger picture of things. So here's a simple strategy. As you can see, this one does engulf this red candle here. So I like to take the trade right when the candle closes, and I like to go slightly below the lowest low in this scenario of the two candles. So in this case, it would be this engulfing one here. So I'll go slightly below it, and I do 1.5. Very simple, very straightforward. You can't go wrong with that. But if you miss this trade, here's another one right next to it. So same idea, engulfing candle, red candle. The lowest between the two will be this red one here. You put it right under it, 1.5. Oh, it was already at 1.5. Then you enter it here. You only take long when the price is above the EMA, and you take short when the price is below it. Here's a great example on where not to take the trade. You do have a wick at the bottom here. You want it to be first. For a long example, it has to be a red candle first or bearish candle followed by a bullish candle engulfing. In this scenario, there's this wick in the middle, so this does not count. Here is technically a good example, but in this scenario, it happens to be a lot, right? Like I said, this strategy is not 100%. This is not the holy grail, but it will really heavily improve your win rate if used correctly. More as you can be used as a filter or as a strategy, as we're going to show here today. Here's a great short example. Green bullish candle followed by an engulfing bearish candle under the EMA. Enter. You put your stop loss above the highest of the two, which will be this red one slightly above, and you do 1.5, and there you go. That's an easy win right there. There you go. So that's another perfect example. These can also be counted, but I prefer when the actual price is fully below the EMA. As you can see, this one was engulfing, but it kind of like broke up and then broke below it. I don't count that. It needs to be fully below. So in this scenario, like this one would be a great example. So here will be another trade. Stop loss here. Stop loss right above 1.5, 1.5. Here you go. So here's another easy trade. Oh, and there's another one right following after it. So again, bullish candle followed by a engulfing bearish candle. Take the entry, stop loss above the highest of the two, which would be this one, slightly above. Then you do 1.5 from there. So there you go. So here are 1, 2, 3, 4, 5, 6 trades. Out of 6 trades, there's one loser. I'm actually going to log these trades in now for the 100 trade testing, because the point of this video, we're going to be testing the strategy for 100 trades so you can see the real results. So let's actually track this with this software I created for the actual back testing. Here you can see the equity is 100,000. You can update the equity itself. You will see the trades taken, your P&L, and the win rate. And you'll see an equity curve here so you can visually see how it has been improving. Here you have the win and the loss buttons where you can kind of change. So because we're doing 1.5 and we have a $100,000 account, I'm risking $1,000. And if I win, I make $1,500. And down here are the logs for every trade you take. So because we won, this will be part of the 100 test. So we won 2 in a row, 1, 2, you lost 1, and we won 3 back to back. 1, 2, 3. So here we have the first 6. With the 6, we're at 83.3% win rate. But we're going to do the 100 to see how it plays out. So if you guys enjoyed this video, please like and subscribe. And at the end, we'll talk about the actual results, where it can be improved, how you can potentially add other aspects to improve it even more, and how you can actually add it to your specific strategy, just as a filter to improve it overall. I will come back and maybe give some notes throughout, but if not, I'll see you guys at the end. One thing I forgot to mention with this back testing, I'm only going to be taking 1 trade at a time. As you can see here, there was at least 1 trade here. This trade specifically did win, but let's say you missed this trade. There was another trade right here and then another one right here for 2 wins, but I'm not counting those. I'm only counting the 1 trade at a time, which would be this one here. It was an easy win. But yeah, for this back testing, I'm only trading 1 trade at a time. But if you were to add, you can technically stack these if you want to have a higher win rate or RR. But for this specific back testing, it will only be the first entry. All right, but I'll continue the back testing. One thing I just noticed with the strategy as well, whenever you get an engulfing candle like this specific trade here, where you get the green bullish candle and then the red bearish candle, one thing I've noticed is if the first candle in this scenario is very small, it can be is almost like a wick candle, very similar to this trade up here, like it's just like a little wick. These tend to give you a larger percentage of losing because it doesn't really have momentum here. When you do get a scenario like this where it does have momentum in one direction and the very next candle completely absorbs that momentum, that's a higher win rate engulfing entry. These little ones where it's like a wick give you lower win because it's not really taking over anything. It's just kind of like, it's like a very short pause. So there's no real momentum being built. So ideally you would want at least a little bit of a bigger body. Like this is a good example. It's not that big, but it's still like a decent size. And then the engulfing completely absorbs this. So it kills the entire momentum. There's really not much momentum with the wicks. So that's just a quick advice just from testing this. Like for example, this is actually a good entry right here. I'll take this one live with you guys. Entry right here. Stop loss at the very bottom of the 2. 1.5. There you go, easy win. It was really close to taking this out, but that was an easy win right there. So let me log this and let's continue with the video. So here's a 50 trade midpoint, just to kind of go over a little bit of what I've seen. So at the 50% or at the 50 trade mark, we're still up about 7,500. Like I said, the way we're risking is we're risking 1,000 to make 1,500. Has a 46% win rate. One major thing I've noticed is there's a lot of times, a lot of losses where the wicks are very small or the prior candles are very small comparative to the actual engulfing. Like this is a good example. Very small, loss. This happens to be a win. But one way to improve this is having maybe like a volume indicator or something to kind of show the real difference. Or like the order flow, for example, would be a great addition to this, just to filter out like these small wick candles or more like doji candles, really. Like anytime they look very doji-ish are potential chances for a lower win rate entry. So keep that in mind when you're testing this yourself. But anyway, I will continue and get back to you at the 100 trades. Okay, so now we're at the last trade. It looks like it might be a loss only because there's a fair value gap right under, but hopefully that is not the case. And it was a loss, unfortunately. All right, so here you go. So here's the 100 trades. As you can see, it was kind of stale at the beginning. It did go up in some profit and kind of just like flattened out a little bit, but then it picked up a lot of momentum when there was actual trend. and then it kind of flattened out again at the top. So of course, this is the trend following strategy. If there is no trend, your win rate drops drastically. But in this specific strategy, which is super simple, as you can see, you get a 50% win rate with $25,000 in profit if you risk $1,000 to make $1,500. It can't get simpler than this, and as you can see, it does a good win rate and P&L. But you can add this pretty much to any single strategy. If you wanted to confirm or even improve the strategy, you can add a volume indicator. A great volume indicator can be the water altar explosion. This is a great volume indicator. This indicator works as follows. Here's the no trade zone, which is little dots down here. If the price is below there, there's not enough volume to even take a trade. But if the actual candle is above it and above this moving average that is used, like the explosion line, if the price is above that or the volume, and then you get the signal, that's a great trade. If it's a dark green, it means it's building momentum right there. So this would be a great entry to confirm. This was also a great entry, but unfortunately it was a loss because it already kind of pulled back and there was a fair value gap right here. This is a great use of this volume indicator because look, this trade would have been avoided. These two losses right here, these two would have been completely avoided if you use a volume indicator like this. So even this loss way down here, even though it met the criteria, it would have been completely filtered out. So it would have removed 3 losing trades. Yes, you still get losers even in a perfect scenario, but this is, like I said, is not the best trading strategy ever, the simplest. No, this shows you with simplicity and consistency, you can create a proven strategy. And of course, there's always methods to improve it. Like I said, this volume indicator is a great example. The other one that can be a great example is market structure and candle patterns. Like I said, anything that's like a doji candle does give you a much less of a win rate because they're kind of just like a quick pause in the market. It's not momentum shift. Like we said earlier, it's not a momentum shift. Because it's not really a momentum shift, the win rate drops a good amount. A lot of the losses during this time frame, which were actually during consolidation, you had a lot of trades like that. Of course, some of them played out as winners, but there was a lot smaller of a chance of it happening. The other thing you should consider, if the actual EMA is kind of flat, if the EMA is flat where the price has been bouncing through it fairly often, like for example, this is a great example, this is consolidating. Right, you get a lot of losses here. As you can see, there was a good amount of losses I had in this area because the price was kind of consolidating through it. These are the kind of markets you want to avoid, and you can get a lot of clean trades when the actual market is trending. As you see here, there was a good amount of winners because it was all trending in one direction. But based off the 100 trades themselves, as you can see, this simple strategy performed very well. And it only uses one indicator and one candle pattern. That's all you really need with consistency, and you can find success. Add this to any of your strategies. Use this as a filter for the trend direction and tell me how it goes. If you like the strategy itself, you can please like and subscribe. Wednesday's videos, I will actually create a code that automates this better. And on Friday will be a Ninja Trader version where it is fully automated for this simple strategy. And like I said, this is the basis of a very strong strategy that you can add to pretty much anything, and your win rate should go up simply by adding this indicator. Anyway, thank you for joining me today, and I'll see you on Wednesday's video.